paying zero taxes legally does not mean avoiding taxes. It means understanding how the financial system rewards smart planning. Most people focus only on earning more money, but wealthy individuals focus first on reducing taxable income. The first step in legal tax reduction is knowing which deductions and credits can lower your tax burden. Strategic financial planning begins when you treat taxes as something you can manage, not just something you owe. Retirement accounts can legally reduce taxes today while helping your money grow for the future. Tax-advantaged accounts are one of the most powerful tools used by financially educated people. Business structures can open legal opportunities that ordinary employees often overlook. Smart use of deductible expenses can turn normal spending into legitimate tax-saving strategies. The goal is not to hide income. The goal is to position income in the most tax-efficient way possible. Understanding the difference between earned income and investment income can change your tax strategy completely. Many wealthy people lower taxes by shifting focus from active income toward long-term wealth-building assets. Every legal deduction you miss is potentially money left on the table that could stay in your pocket. Tax planning becomes powerful when income, expenses, and investments work together as one system. Reducing taxes legally often starts with structuring money flow before tax season even begins. Financial freedom grows faster when you protect income through strategy instead of losing it through poor planning. The wealthy often use retirement planning, business deductions, and tax credits as a financial shield. Legal tax minimization is not a secret loophole. It is often built into the system for those who understand it. When you lower taxable income while growing assets, you create a stronger long-term financial foundation. The biggest tax savings often come not from one tactic, but from combining multiple smart strategies together. Mastering legal tax reduction is ultimately about using knowledge to keep more of what you earn. Advanced tax planning often begins when you stop thinking like a taxpayer and start thinking like an investor. Tax credits can sometimes reduce taxes dollar for dollar, making them far more powerful than many people realize. Understanding how income is categorized can help reveal legal paths to lower overall tax exposure. Many financially smart individuals use business ownership not only to build wealth, but to create tax efficiency. Ordinary expenses can become valuable deductions when structured correctly under legitimate business activity. Long-term investing can offer tax advantages that short-term income often cannot provide. Wealthy individuals frequently prioritize tax deferral because money kept invested has more time to compound. The difference between tax avoidance and legal tax planning is knowledge, structure, and compliance. Strategic record-keeping is often what transforms a financial plan into a legitimate tax-saving system. Passive income structures can sometimes create both wealth growth and more favorable tax treatment. Tax minimization is strongest when financial decisions are made proactively instead of reacting at year-end. A well-designed financial structure can reduce liability while increasing long-term control over your money. The key is not simply earning more, but keeping more through efficient financial planning. Investment-focused strategies often shift attention from taxable events toward tax-efficient growth. Every deduction, credit, and deferral strategy works best when it fits into a larger financial blueprint. High-income earners often reduce taxes by changing how income flows rather than trying to change tax rules. Legal tax strategies become powerful when combined with disciplined investing and long-term planning. Smart taxpayers often focus on reducing adjusted income because many opportunities begin there. Financial freedom grows when taxes become something you strategically manage rather than passively accept. True wealth is often built not only through what you earn, but through what you legally keep. The highest level of tax strategy often comes from aligning income, investments, and deductions into one coordinated system. Capital gains can sometimes receive more favorable treatment than ordinary income. which is why investors study tax structure closely. Long-term financial growth often improves when taxes are deferred and money remains invested longer. Many advanced strategies focus less on reducing earnings and more on reducing taxable exposure. Wealth building accelerates when every financial move is evaluated not only for profit, but also for tax efficiency. Tax planning is often most effective when decisions are made throughout the year instead of during filing season alone. Financially educated people often use compliance as an advantage rather than viewing taxes only as a burden. Smart asset allocation